Hello, everyone, and welcome to another episode of Ahead of the Curve. Thank you for joining us today. With us again, we have our co-heads or heads of business development here at LSEG Post-Trade Solutions, Stuart Smith.
Hi there.
And Will Tomey.
Hello.
Thanks for joining us today. Stu, you and I have been doing this together for
quite
a few times. Will, I know this is not your first podcast, but I think this might be the first time you and I have
in this
done
studio.
This.
Yeah,
in this studio, especially. Today, what we want to talk about, what we like to do around this time of the year as we record this, it's January 2025. We had a big, busy year of 2024. And what we're going to do for this podcast anyway is to kind of look ahead for this year. What are some of the big topics that collectively we're looking at from a business perspective? What are some of the interesting things that are on the horizon maybe? And really the things that you're both focused in on for this year. We'll have a good conversation. We'll throw it back and forth between the both of you. But I'll start first with Will. Will, I know your main focus is workflow.
Mm-hmm.
Stuart's is the risk area, but obviously they all kind of commingle together.
Mm-hmm.
And as we're bringing post-trade solutions together as one cohesive business, it's even more important this year than ever. But we will kind of look at things in a siloed way-ish, and then we can talk about other things and how they fit together. But I guess my first question to you is really, what is the outlook for 2025 from your perspective? In the workflow space? I know we've talked about things like settlement netting and tokenization and a few other things, and I'll come up and I'll bring up UMR, which is always near and dear to my heart in a little bit, and that never goes away apparently, but we'll talk a little bit about that. And then Stuart will talk a little bit more about what's on the horizon in the risk space. And I know you and I have another podcast to kind of dig deeper into some of those topics. So, Will, first to you. What are some of those things? Can you just kind of take us through? And, what are some of the more interesting things that are on your hit list this year?
I think at a high level, it's, we've been part of the London Stock Exchange Group for a period of time now. And that invokes the obvious questions around how do things start to come together and,
Right.
and what are the interesting capabilities that we have in collectively post-trade, and how do we assemble that in some meaningful way that's interesting to the market and our clients. Mm-hmm. And the easiest way to project that, I guess, would be in a more operational context of what we're doing in workflow. It's really the scenario of any market where each counterparty to some form of trading is calculating their own requirement, and there is no authoritative data. There's no central calculation happening, right? So effectively then what they're doing is using Acadia workflows to match and commonly agree to transfer typically some form of collateral, but it can be other settlement requirements. And then if you go then step a little bit further into other areas of the post-trade solutions business unit here, we have swap agent and trade agent, which are looking to build out services that are more authoritative data in nature. So they're doing central calculations that, effectively both parties then are not doing their own calc, and it's authoritative data, and they're disseminating that out and kind of articulating settlement in a way. Right. So, how does that all come together? I think that realistically all we're doing is if you took a map of everything post-trade, the different markets that exist, and we're looking at, how do we support holistically, both models, and how do we start to bring things together? And I think the most obvious way that we'll start there is in terms of settlement. Everything is a silo to some extent, whether by market or type of settlement, and how do we start to bring those things together into a more holistic kind of service that's catering for, the nuance that might exist.
Yep.
By market. So I think that's where we're at.
So you mentioned authoritative data, easier for me to say. What are some of the benefits? I know that there's still a lot of legacy systems that do a lot of these things, kind of in a legacy type way, lack of a better word. The benefit to me is, taking a lot of the friction out of it and ensuring settlement. Does that mean preventing settlement fails?
There's some extent. I think the realistic scenario is a central calculation eradicates that you and I might calculate something differently, right? And so it kills that problem. Now, realistically, in so doing, people have to get comfortable of giving up certain kind of risk-like calculations at times to a central service. And that's not always the easiest thing for the market to adopt. But so I think we see this as a continuum of, the bilateral markets will exist and operate as they do today. Mm-hmm. And as we can insert kind of more depth into swap agent and trade agent and similar services where we're producing authoritative data to kind of build that trust over time and support holistically either model. But, I think that we obviously have a want to help solve certain friction in the market, and authoritative data is one way to do that.
Yeah, I mean, that idea is not brand new. And I think, it is a differentiator for us in terms of a business. People listening to this, hopefully our clients and prospective clients, I'm not gonna hold you to any dates, but is this something that we're currently doing, or is this kind of more of a look ahead, 2025 and beyond?
We are literally active. While I'm here, is typically visiting clients and
Right.
starting to get some views and shape that. There's an overwhelming amount of interest for us to figure out how to use the kind of best pieces of the different products that exist within the group here, and start to bring things together. And again, settlement's the most obvious thing where that likely can be most initially happen. So it doesn't matter if it's authoritative data, central calculations of something, calculating a requirement that needs to settle, or something where both firms are calculating their own requirement and using an Acadia workflow to mutually agree to some form of transfer. At the end of the day, they still need to settle, and so there's different ways that happens today. And I think the step one is almost looking at the white space. So what I'll say, kind of the commitment this year is, we lack currently a direct ability supporting kind of prime brokerage margin requirements.
Yeah.
Okay. And I think one of the questions is people that are firms that are most enthused about kind of this netting oftentimes are the hedge fund community, at least on the buy side, and they will oftentimes have some form of prime brokerage account. Not always will they, but it will be common.
Yeah.
So they look at it, if I'm trading non-cleared derivatives and repo transactions, and I'm also using my broker as a clearing broker for cleared derivatives and futures and options, and I might trade TBA, that may be, maybe a little bit less common. And then similarly, I would have some form of trading happening under my prime brokerage construct. And so if I have all of those silos, I'm literally settling, if I'm electing to use cash to meet all those requirements, I'm settling cash back and forth with my broker multiple times a day.
Yep.
And so how do you collapse that down? I mean, that's always been again, nothing novel here. This isn't some thing that the industry hasn't thought of before. But if you look at our collection of capabilities now within this group, I think people legitimately think that we have the right pieces to be able to bring together and to create a really interesting solution for the market.
Yeah, I think you're right. I think you just hit the nail on the head, right? It's not a brand new idea. We've been talking about this as an industry for quite a while.
Very long time.
And I think there have been plenty of, fits and starts with getting something like that done in terms of netting. But like you said, we have the pieces. We have an opportunity to actually put that into
and
practice.
not to architect it too much here, but it's the world lives in silos. Partially, there's some legal hurdles that exist there, but these are solvable things. And there are cases where operational netting agreements will commonly be referred to, that these things exist, and between two different bilateral parties that people are settling some form of different obligations that would naturally be more kind of legal silos to some extent. So there are instances of this. The issue ends up being, it's good for risk management. It's good in terms of reducing settlement risks associated with, if I pay you and you don't pay me, obviously, why would I pay you? So netting that exposure down is an interesting thing to do. There's typically some form of funding-like benefit, and not all firms operate the same way, but there usually is some form of funding benefit, and there can be other liquidity benefits for banks in particular. And so there's, and by the way, if we do it smartly, it should be a more automated solution so that you're doing less settlements in a more automated way. And so operationally, you should get some form of benefit and control out of it as well. So it's how do you chip away at that problem? What's the scope of it? How do we start bringing some firms together? How do we close the white space down? How do we march forward and actually start to do something interesting? So
I would say there's always more to come, and I use that term a lot. I think there's more to come here for sure.
Completely.
And I think we'll probably come back to this at some other point, especially when it's hopefully maybe, I'm not going to put a date on it, but at some point we have clients actually doing this in practice.
This early quarter, so where we sit here in January right now, and in Q1, it's really kind of getting really kind of the interest in what's the common scope that people think the starting point should be what, right? And so you could start in a few different angles of this. It is an interesting topic, but annoyingly, it's probably the thing I've probably talked more about in my life, in my 23 years or whatever in financial services. That
And you're doing it right now.
yeah, well, and we're still talking about it, right? So I feel compelled to solve for it, obviously, in a practical sense, so let's do it. Yeah,
Let's do it.
correct.
Let's do it. All right, great. Thank you, Will. I know there's a couple other things I had mentioned. Stuart, I know you're sitting there.
Yeah.
We can go back and forth, but I do want to finish on a couple other things that I had mentioned in my intro. Will, we've been talking about things like tokenization. We've been talking about repo. There's in the U.S. there's a treasury and repo clearing mandate, and then there's some UMR. Mexico has gone live. India is going live in the middle of this year. So far, April 1st, and then Stuart, China had just come out with their rules
With the roadmap,
recently,
yeah.
and their roadmap, which kind of extends into like 2028. And I'll come back to you on that maybe a little bit. But Will, just to kind of finish off some of those topics, tokenization, repo, and treasury clearing, these are the things that are really on our roadmap for this year. Anything to add, like anything that you're seeing in terms of like focus for the business,
Yeah.
for our client base, and if there's anything else maybe that I'm missing.
I think that the UMR point and repo clearing, and that seems like firms will want to start to try to figure out how to go live. It isn't a requirement until end of June of next year,
Right.
but by kind of the back half of this year, start to do something there. So I think we need to offer a workflow to help people operationally support that interaction of margin requirements between kind of their now clearing broker or sponsored broker in some context for repo transactions. So that I view as white space, effectively, that we need to fill in that white space as we kind of move into that time period.
Kind of like what we did earlier this year for TBA margining.
Completely. And I think comparably UMR fits a similar fact pattern in that maybe it's a little bit specific to certain markets, but where we can be involved in those markets to help kind of the operational processes around kind of margining that activity, obviously we want to be doing that. No different than where we've done it in other places.
Yeah.
Tokenization, real quick, is it's just a more complicated topic. I think the way tokenization at the simplest level is, if you're transferring securities, one view is it's very cumbersome, and we can see this in T+1 and all the interest that's kind of gained in the fixed income and equity markets. But
What about substitutions as well?
yeah, well, substitutions, like it's more moving a security from me to you. So I own some form of government bond, whatever this type of security is. It's not a trivial process. I think people that aren't familiar with it probably think settlement's like this instantaneous thing, but there's this long daisy chain and lineage of systems typically, and operational teams, and sometimes accounts, and kind of involved in getting a security transferred from me to you. Now, one way to change that is, or sidestep that kind of complexity, is to onboard that asset in some capacity into like a digital ledger. And then once you do that, you entrust the ledger to be the determining factor of who owns what at that point in time. And so then the transfer from me to you is simply, a bit of data that's kind of coming through a ledger that's saying, I changed it from, my ownership to your ownership, and you're done.
We're talking about like a closed ledger,
I think
or any ledger, or
the reality is
ledger fit for this type of.
There's been a lot of work on this. There's certainly companies that are out there that are trying to solve this problem. Our view is more, if the industry pivots in that direction, I think we can help them adopt that type of technology by connect them into these ledgers. I don't know if we'd ever go as far to want to kind of create our own. I mean, we talk about it sometimes, but realistically, that's a slightly different angle of things.
Yep.
And if we're brutally honest, as much as we've talked about it for a number of years here, there's very thin actual kind of production use cases. You see it most in intraday liquidity repo, and that's where it's kind of actually gotten some real material use in a production standpoint. In the world of collateral management, it was always thought that would be the next obvious place to kind of start, or
Not
figure
to
out
plug
how to work
DTCC,
it.
but that's what they had worked on, right?
Yeah, there's a few. I mean,
Repo space.
JP Morgan did some stuff with their Onyx platform, and
Yep.
there's other firms that exist out there too. So again, not to plug people, but there's people doing interesting work on it. I think the demand is debatable. I think that's what it's like. We don't stand to win one way or the other. All we want to do is try to help firms automate.
Yeah.
And this is one approach where the industry could pivot towards tokenization. If they do, again, we would be, fully helping as much as we can to kind of connect them into these new capabilities.
Gotcha. Thank you for that, Will.
Of course.
Appreciate that.
Of course.
Stu, you've been sitting there very patiently.
Yeah.
I didn't forget about you. We still got a lot to talk about in your world, although our worlds are all together, but we all have our focus. Just getting back to UMR, I had been doing some work in the Mexican market, just so people know, as of this, the recording of this is January. We are looking to kind of do some events in Mexico. But we have India yet to come, and we have now China yet to come.
Yeah.
India is interesting. Your thoughts there, because it's quite different. They're using the central clearing mechanism for SIM calculation. Then we'll get into, I'm using this as a segue into talking more about SIM and optimization in general, but figure we can kind of talk about this first. What are some of your observations? I know there was a delay in for India. It was November for the first go live date. Now it's moved to April. But they do have a different type of setup.
Yeah, if you take Mexico, quite a traditional UMR rollout, it feels like.
Yes.
Similar set of rules, similar set of requirements, and rolling out following, largely the norms that have been done elsewhere with some tweaks that make sense for their geography. But then when you look at India, they've taken a very different approach where the CSIL is going to take a much more active role in helping people calculate and manage initial margin, much more as a centralized infrastructure provider, which is really interesting because that's not the way anybody else went. I think it was always an option around ISDA SIMM, but in the end, most of the time, people have gone down the kind of bilateral route using third-party infrastructure providers where necessary. Yeah. So it'll be interesting to see how that goes and what the benefits and limitations of having done that are. I think, that date is still pretty aggressive on the 1st of April.
Agree.
But we're assured that is the date they're going live. Yeah. And the recent FAQs and other pieces have come out to fill in some of the gaps. I think there are still some questions people have around some of those mechanics and how that will work in the early days. But it'll be fascinating to watch it go live and see how that approach works.
Yeah, I agree. I mean, we've been following this for quite a while. And VM went live, and now we have the IM rules, and the construct in the central clearing corp of India is very interesting. I think we've been talking about doing some more education around with our clients on how that is going to work, how they can potentially leverage our solutions to help as well. But I think it's it is a unique situation. Let's put it that way. So we'll see. And, I think, as a business that we're always, because we are the standard in IM reconciliation and calculation, we should probably play a part.
Yeah.
But we'll see.
We were talking this week, actually, that we feel it's probably about time to start doing maybe some SIM refresher courses. Yeah. Probably 5-6 years ago, there was, a lot of people went on those kind of courses, learned all about SIM, became quite expert in it. Yeah. There's that natural turnover of people, and there's a lot of new people now in that world who maybe didn't get some of that background would benefit from it. But then also there's new geographies. Yeah. I think it's worth understanding some of the mechanics of the calculation. If you're coming from a VM background, it's a big jump all of a sudden to ISDA SIMM. It's maybe not so much of a jump if you're coming from a risk background. But yeah, I think some of those education courses might be quite helpful. Let people really understand how that calculation works and some of the challenging parts of it as well.
And some of the changes, which we're going to go into really quick. But I'll finish off on that. And Will, if you have any comments on that, happy for you to jump in as well. But again, as of the taping of this, and it's always dated, you can look at a date when you watch it. Hopefully, people are watching it January. From Mexico in general, in terms of education, we are working with our clients directly in the region to do more education, kind of give them updates, and we do have a working group that is still running even past the December 31st go live date. To continue that, I think we're going to be partnering with ISDA as we've done many, many times in the past, and they are also going to probably join us. We don't have exact dates, but maybe we'll put a link to the working group on this podcast, see if people want to join. Working group, obviously it's only open to clients, but if any clients are watching this, we'll give them an easy way to.
You'd have to be a special
kinda get
breed of
those
person to not be a client and want to be part of one of those workers.
Laura's got some good numbers on our podcast. We're doing really well here, so and thanks to the crew for making us look good. But anyway, so that's part of some of our efforts that we've always done and will continue to do. But you're right. Look, we're not going to be around forever. We got to pass on what we have learned, right? I think I heard that from a Star Wars movie. I think Yoda said that. Anyway, joke. Moving, kind of staying with SIM now.
Yeah.
2025, there's some big changes
changes
happening. Break it down for us.
So people may have heard us talk in the past about recalibration cycles. And the last one was one of the biggest recalibration cycles we've seen. We think around about $100 billion change in exposure across the whole industry. And that's a whole year's worth of changes in the marketplace being wrapped up into recalibration and published. And I think for a while there's been this feeling that that doesn't really meet the original requirements that people had for this model. And there's also just too long a time frame to have for recalibration. So there's been this push to bring down the calibration windows to make them more regular. And we're going to see that come into fruition this year. So we're going to see 2 recalibrations this year. And ISDA have let us know the timings for those now. So we're going to see one go live at the start of July.
Yep.
And the second one go live at the start of December.
Yep.
And they're going to split out recalibrations. So simply changing the underlying data that goes into the model and recalibrating it using the same methodology from the model itself or any calibration methodologies that they use to generate that model. So now we're going to see this kind of 2-tier system where we have calibration changes coming half yearly for the moment. I think some people are suggesting may go even more frequently going forward. And then these longer time frame model changes each year coming out aligned with the December release.
What do you think? How, again, just always putting myself in the client's shoes, what are some of the challenges for them? What should they look out for? How are we helping them?
So I think, actually quite tough.
Yeah.
Those time frames are quite different. It sounds, it's not going to be that different. Well, halving the time, maybe that's going to be okay. Realistically, your time to consume a new version goes from 3 months to 4 weeks. And when you put it like that, it sounds like a really big change. And it is a really big change. And a lot of those people are using vendor systems with install packages. 4 weeks is an incredibly short amount of time for someone to create a release, ship it to their clients, install through UAT, and get into production.
And have some contingency.
And, forget contingency.
It's too quick.
It's far too quick. And some of those vendors may have 100 clients that they have to release patches to in that same 4-week period. That is tough. We're lucky. We're a SaaS vendor, and it's one platform, and we can put a time frame in. We're still, writing it down and making sure we've got the thing to go by the numbers.
Sure.
But much tougher if you're doing an install system and you've got your own model running internally. Not to mention all the models that hang off it as well, your XVA models and other things. So I think a lot of people looking back at, those processes, seeing if they can tighten them up, seeing where they can cut out some dead time. We've released extra tools over the last couple of years in anticipation of these changes coming to make it easier for people to do impact analysis, to make it easier to do back testing and other things. Please do make sure that you're ready. Make sure that you can do that time window. And if you're struggling, by all means, talk to us, and we can tell you about some of our experience and how we've approached things.
Yeah, I mean that's a great message. As always, we are plugged into the forums and are fully updated as any good vendor should. But that's good to know for anyone listening who might have some questions around, what it means for them. If I'm an end user client, what are these changes for the SIM recalibration gonna mean? And this really comes from the recommendations, right, from the regulators. This is the reason why they're doing it.
Absolutely,
to be more nimble. And I would probably put money on it that, like you said, it might change again, and we'll see how that goes. There's no plans to do that. I don't want to start to scare anyone or speculate too much. But as we know, things don't stay the same too long.
The changes seem to have been put together very well.
I think the communication out to the industry has been very good, and so kudos to ISDA.
And a lot of flexibility in the future about how they want to structure it. If they wanted to make another change, they've done the structural changes they need to now to enable themselves to be more nimble in the future. So now they've got more flexibility.
Absolutely. All right. Well, more
Yeah.
to come. That's July is the next one coming, so that'll be here before you know it.
Yeah.
I can't wait. It'll be summertime and golf.
I can't wait.
Stuart, anything else? Like, what are some of the other big things you're looking at for 2025? We've talked about things like IM optimization. We're talking a lot about SIM for House IA, and we've talked about that recently while we were here. And then, maybe we'll just kind of throw a monkey wrench and talk about AI. We have to, it's an obligation now to talk about AI.
Yeah.
So we'll just talk about it a little bit before we close. But what else is on the agenda? Obviously this is not exhaustive. I don't want everybody to think that this is only what you're doing. We're getting the highlights down. So
I think optimization is important. It's incredible when you see how much of an impact those firms have on IM levels globally. They're pretty important in the amount of IM that gets posted and making those bank business models work. IM optimization in general is really driven off data quality. The higher the data quality, the better an optimization that you can get. So we're doing some work with a lot of banks to try and improve the quality of SACA data that we can see. So really interested to see how we can use data standards similar to what we've used elsewhere to see if we can bring more consistent data that we can use more widely and really help banks get that data quality high as it is hopefully for ISDA SIMM. Yeah. And then they'll get more benefits from the optimization they get off the back of that.
Awesome. Okay, we can start to see how 2025 is going to look. Hopefully there aren't any giant surprises, but you never know.
Yeah.
Market disruptions could change everything. We shall see. In the U.S., obviously, we have a new administration coming. From a reg and industry perspective, which is near and dear to my heart, there's going to be some changes at some of the agencies. We've talked about things like Basel III Endgame. Who knows where that's going? And then anything really associated with the SEC, Gary Gensler stepping down, whoever's going to head that, there might be changes. That affects everything we do. Could even affect some of the things we're talking about here. But we shall see. But this is probably a good, this is kind of a good overall view into what we're going to be facing this year. And we even know about some things in 2026. We'll probably come back next year at this time, hopefully, if we're all still here and doing well, to talk about 2026. I know I mentioned AI. What are we looking at right now from our business perspective? Obviously, we have a chat bot, right? That works off of ChatGPT, and that has been like kind of our first little toe into the waters, but disruptive, helpful, destructive. You don't want to ask me what I think, because I think we're all going to be sitting on our couches at some point with no work to do.
Nah.
But maybe we'll be long gone before that happens. But
you always need ideas.
Yeah, I think so. I think for the interim, in my opinion, I think it's going to be very helpful. I think, ChatGPT, I only heard about it from my daughter, who's a college student, not less than 2 years ago. Yeah. And all of a sudden, it's being used for so many things. It's almost replacing Google for Google searches, and it does help me write, actually.
So we definitely this year, we've been using the chatbot internally to help us navigate regulations, navigate our own documentation, and it's proved invaluable for those things. I think this is the year that we'll bring that to clients, make it more available more widely. So we're really looking forward to that and getting some more feedback. We did some demos recently at some client events, and people loved it. Yeah, people just crowded around the machine and just kept throwing stuff at it. And it was great to watch.
Multiple languages,
which is, we forget that sometimes, how global we are as a business and how important it is to hit some of those other languages where, it's not always so easy.
Yeah. And we're such a niche. It's like the training that we can offer into some form of capability like that is the uniqueness. Right? That is the difference.
That's right.
I think some of the crossovers between my world and Will's world, where, we have risk calculations that we then try and reconcile so we can drive a workflow off the back of it. I think this is the area where it could be really interesting to automate as much as possible some of those processes to make it easier to get data from one firm to another. And I think that's an area that we're going to try and jump into this year. Very hard to know what's possible, but I think it's really exciting and somewhere where could have a real impact in terms of the efficiency for firms, the amount of manual intervention that's needed, and how much just more we can automate.
Yeah.
And probably one more use case that's a natural language model type of use case, which is we have a relay service, which is trying to take an email, and today it requires the email to be fairly structured in the composition of the email so it can be read into our workflow product. And that's effectively just helping to automate. If my counterparty is not on the network, I can still get the automation benefits by plugging kind of email into the tool, and we call that service relay. It, however, is, the requirement is it's fairly structured in the way you need to kind of represent data in that email so it can be understood as a margin call.
Yeah.
However, a language model kind of bolted into that obviously should be able to help. If I can understand a person reading an email and kind of the natural heartbeat of a day and what that client's telling me, equally, the language model can do the same. And so I think the difficulty there is, one, how do we do that? How do we do that in a controlled way and all of those things? And then equally, how do you always, the risk is, how do you know there's something that might not be fully accurate? Some level of concern that my interpretation might not be right, and serve that up to clients so that they can make an action, or kind of which oftentimes would obviously be send an email back to my client around, I don't quite understand what you're saying here, right? So, but it's an interesting use case. I think we're currently figuring out what would be the right plumbing for us to kind of go after that.
Yeah, we're scratching the surface. So large language models, generative AI, it's all coming. It's obviously coming to the world of finance as well, and to our business. So
yeah, and not to mention like how we build tech, right?
Yeah.
Like I think over time,
it's all
that'll be hopefully helping us deliver things quicker and quicker and quicker into the market, right?
Absolutely. All right, guys. I think we'll leave it there. 2025 is going to be a busy year. Sounds like a very good year. And I look forward to see how all this stuff comes to fruition. Thank you both for joining us today. And we'll see. We'll see what 2025 brings. Thank you, guys.
Thanks, John.
Appreciate
Thank you, John.
Thank you all for joining today's podcast. I hope you found it interesting. I know I did. You can find this podcast and all our other podcasts on Spotify, YouTube, and any other of your favorite streaming services, and at acadia.inc, our website. Thank you for joining us today. Thank you to my guests, and we'll see you again soon. Bye now.